Welcome to the Deep Dive. We're taking a close look today at, well, the surprising currents moving beneath the surface in the financial markets. It's all really tied to artificial intelligence.
It is, because if you just glance at the major indices, say, over the last couple of months, you might think not much has changed. Kind of flat since that big trade announcement.
Right, almost like things are on pause. But that's not the real story, is it? When you dig a little deeper, it's actually, well, pretty fascinating and active.
Exactly. The headline suggests calm, but the analysis, especially the insights from Tenenbaum we've been looking at, paints a much more dynamic picture. You've got this interplay of geopolitics and AI advancements.
Okay.
And it's creating both significant instability, but also some distinct opportunities.
Okay, so let's unpack that. We're really leaning on Tenenbaum's analysis here to get a handle on these market movements and the sort of fundamental forces driving them. The mission today is to pull out those key learnings, understand the big shifts in AI and investments, and hopefully give you some clarity in all this noise.
And that initial observation is interesting in itself, isn't it? This apparent quietness. Tenenbaum notes that if you look from that trade announcement a couple of months back until now, the big picture might seem unchanged.
Okay, so flat surface, but underneath. Tenenbaum's saying there's actually been a lot going on.
A whole lot. And that kind of hidden volatility, even when the main indices look stable, well, it creates chances. Yeah.
For people thinking about rebalancing portfolios, maybe reassessing if their strategy still fits this rapidly changing scene.
Precisely. It really forces you to keep evaluating. Now, Tenenbaum actually connects this to something broader, a shift he saw starting earlier with the arrival of the Trump administration.
Ah, right, the Trump effect. Tell us more about that.
Well, according to his analysis, market behavior really shifted then. He saw these unexpected policy moves, like the tariffs, leading to much bigger swings. We're talking like 5% up or down in a day, compared to maybe 0.2% to 0.7% before that, much more dramatic.
Wow, yeah, that's a huge difference. So this element of surprise just became part of the landscape.
Exactly. And Tenenbaum thinks this surprise factor is probably sticking around for the next, say, 3.5 years. So his advice...
Let me guess. Stay calm.
For the long-term investor, yeah, pretty much. Stay calm, ride it out. But for short-term traders, it makes things a lot trickier, much more volatile.
Makes sense. Okay, so with that backdrop of market sensitivity, let's dive into AI itself. There was talk initially about challengers to NVIDIA, like DeepSeek. What's Tenenbaum saying now?
Yeah, that initial buzz about competitors, DeepSeek included, seems to have cooled off a bit under scrutiny. Tenenbaum suggests taking claims coming out of China with, let's say, a grain of salt. The really critical thing here is access to the core AI chip technology.
Right, the bottleneck.
That's the word. He points out China's facing major hurdles because the U.S. has significant control over three key players. You've got ASML in the Netherlands. They make the essential lithography machine.
The really high-tech ones.
The only ones for the cutting edge. Then there's TSMC in Taiwan doing the actual manufacturing. And NVIDIA designing the chips. Tenenbaum stresses how these three are interconnected, almost monopolies in their space. And the U.S. government is actively trying to limit China's access. It's like controlling the tools, the factory, and the blueprints.
A very tight grip.
Yeah.
So how's China trying to get around these restrictions?
Well, that's where it gets interesting. Tenenbaum's analysis flags some attempts. There are reports of more NVIDIA chips being bought through third countries, like Singapore. But the really eye-popping one he mentions is Malaysia. Purchases there are up, wait for it, 3,500%.
Whoa. 3,500%. That's noticeable.
It screams re-export, doesn't it? Malaysia isn't exactly a huge AI player itself, so the strong implication is these chips are heading to China. And naturally, this hasn't gone unnoticed.
I bet. So the U.S. is responding.
Yeah, Tenenbaum outlines a three-part response. First, they're actually investigating NVIDIA itself.
NVIDIA?
Yeah, questioning if NVIDIA did enough to stop chips getting to China. That even caused a dip in their stock for a bit. Second, there's legislation coming that would require GPS tracking on these advanced NVIDIA chips.
GPS on each chip. That sounds complicated and expensive.
It definitely adds cost and complexity, but Tenenbaum thinks the impact on NVIDIA's sales might be limited. Why? Because demand is just so high and supply is tight, they can likely pass on the cost.
Okay. And the third part?
More pressure on Huawei. You know, the Chinese tech giant claiming they've got chips as good as or better than NVIDIA's.
Right. And Tenenbaum's take on that claim?
He's extremely skeptical, calls it, and I'm quoting him here, a book of fairy tales. He says he'll explain why later.
Okay, definitely want to hear that. But first, how's the market overall reacted to all this? The geopolitics, the tech race?
Well, looking at the AI-related stocks since the start of the year is pretty revealing. Tenenbaum notes both NVIDIA and TSMC took significant hits initially, but then they recovered strongly. Both ended up higher than where they started the year.
So a bit of a roller coaster, but they landed on their feet, those two.
Pretty much. But other big tech names, Google, Amazon, Oracle, Meta, Microsoft, their recovery wasn't quite as strong. Tenenbaum puts that down to the kind of monopoly status NVIDIA and TSMC have in their specific niches. So despite the ups and downs, he sees the resilience in their stock as reflecting their, really strong underlying position.
Yeah, that monopoly power definitely helps weather storms. Okay, now, this Saudi Arabia and UAE development, that sounded surprising. They can just buy unlimited NVIDIA chips now.
Yeah, that one came a bit out of left field. Tenenbaum highlighted this apparent agreement, giving them the green light, basically. No previous restrictions. The goal, they want to become major AI hubs.
Unlimited chips sounds like a game changer. But you said Tenenbaum has doubts.
He does. Quite significant skepticism, actually. His main point is the lack of local talent. The expertise in AI development just isn't there yet, he argues. Plus, he questions if they can realistically attract the world's top AI minds, given, the social environment in those regions.
Right. Maybe not the first place top researchers think of moving to.
That seems to be his thinking. He also mentions the cooling challenge. Running massive AI farms in such hot climates takes a huge amount of energy for cooling.
But they have cheap energy, right? Isn't that the counter-argument?
They do, and that helps offset costs. But Tenenbaum thinks the cooling issue is minor compared to the bigger problem, the lack of skilled people. He kind of dismisses that recent idea about Patagonia being great for AI because it's cold. This says cooling is manageable. The real bottleneck for Saudi and the UAE is, as he puts it, no people, no know-how.
So hardware is one thing, but the human expertise is the real barrier. Could those chips, could they end up going to China indirectly from there?
He sees that as a possibility, maybe less likely, but it's on the radar. He also floats the idea of a potential collaboration with Israel. They do have the AI talent regionally, but that's obviously complicated by the fact Saudi Arabia doesn't recognize Israel.
So many geopolitical layers. Okay, let's circle back to Huawei. Tenenbaum was very skeptical about their chip claims. What's the basis for that strong doubt?
Right, he doubles down on that skepticism. He points to a Financial Times report that apparently relied solely on Chinese sources, no independent checks. Plus, there are these reports that foreigners trying to buy and test these Huawei chips in Hong Kong are having a really tough time. That adds to the suspicion.
Lack of transparency.
Exactly. And then there are the technical hurdles, because they can't get those top-end ASML machines.
Lithography ones again.
Yep. They're stuck using older tech. It's more expensive, less efficient, and gives them a lower yield, meaning fewer working chips for every production run.
So even if the design was good, manufacturing is a major disadvantage. Costly, inefficient.
Precisely. But Tenenbaum says there's an even bigger problem: software. Huawei just doesn't have anything like NVIDIA's CUDA platform.
CUDA. That's huge in the AI development world.
It's basically the standard. Massive user base, tons of tools built around it. He mentions AMD has an alternative, but it's generally seen as, pretty poor in comparison. So his bottom line is, even if you believe Huawei's hardware claims, which he doesn't, the lack of a strong software ecosystem severely hobbles them. All this leads him to say he's very hesitant about investing in China right now.
That's a clear stance. Okay, shifting slightly, what about Alibaba? Jack Ma was out of the public eye, then reappeared. How does Tenenbaum read that?
He sees it mostly as political theater, a performance carefully managed for an external audience. He suggests China often uses different messages for people inside the country versus outside, and even has a kind of internal code within the Communist Party. His advice is basically to be wary of public statements from China, especially when they're under pressure.
So less about Alibaba itself, more about geopolitical messaging. Got it. Now, India often comes up as a potential tech powerhouse. What's Tenenbaum's view there?
He's quite critical, actually, more critical than you often hear. He raises concerns about work ethic, infrastructure issues, particularly cleanliness, and the fact that a lot of top talent tends to leave the country.
The brain drain issue.
Right. He gives the example of Apple apparently hitting pause on major manufacturing plans in India, concerns about protecting their intellectual property, and just general reliability issues in the supply chain. He acknowledges there are pockets of tech development, sure, but he doesn't see India as being close to a major global tech force right now.
Interesting. A more conscious perspective. Okay, let's talk about actually using AI. Are individuals or companies adopting it faster?
Tenenbaum reckons personal adoption is generally easier. Less red tape, less corporate fear,
Makes sense.
He gives examples of companies that tried replacing staff with AI, got backlash, and hired people back. But then you have others, like Fiverr, openly saying they plan to cut staff because of AI. For individuals, though, he sees the sweet spot as using AI for things like investment research, just helping you understand complex topics.
Okay. Now, this next bit sounds potentially huge. A breakthrough in how AI learns.
This could be really significant, yeah. Tenenbaum flags this work by scientists in China and the US. They've developed an AI that learns logic by, get this, playing games and getting feedback points for winning or losing. It doesn't need those massive data sets like current large language models.
Wow. So it's not just pattern matching on existing data, it's figuring out rules.
Exactly. It's a move towards AI that can, in a sense, think for itself, potentially getting past the limits of data-dependent models. It's a fundamental shift.
And what does that mean for the companies we've been talking about? ASML, TSMC, NVIDIA.
Well, interestingly, Tenenbaum says the initial findings suggest this new approach still benefits from bigger, more complex models, which means...
more chips needed.
You got it. So potentially even more demand for their advanced hardware down the line if this pans out.
Fascinating. Changes the whole paradigm.
Yeah. It really does. Tenenbaum frames it as moving towards a truly different kind of intelligence, one that can train itself through scenarios and events. He even makes an analogy to that movie, War Games.
Ah, yeah, where the computer plays tic-tac-toe against itself to learn nuclear war is unwinnable.
That's the one. Current AI is limited by human data, real-world rules. Cow can't have 5 legs in the data. This self-learning AI could go beyond that. And again, Tenenbaum sees NVIDIA and TSMC as likely big winners here.
It really opens up possibilities. And speaking of needing powerful hardware, Elon Musk's latest project.
Oh yeah, the giant AI server farm. Tenenbaum mentions Musk launching what's supposedly the world's biggest down south, starting with 200,000 NVIDIA servers. Plans for 1 million.
1 million servers. That's just staggering. It really underlines the demand for NVIDIA's gear.
Absolutely. And it ties into another point Tenenbaum makes. The lead times for getting NVIDIA's top chips are now out to 2028.
2028. So if you're worried about being left behind by AI right now, maybe take a breath. The hardware bottleneck is real.
That's his point. That long lead time actually cushions things a bit, underscores the supply crunch, and reinforces the strength of NVIDIA and TSMC.
It shows their monopoly power in action, doesn't it?
Definitely. And Tenenbaum argues this power makes them resilient. Even bad news, like a potential competitor emerging or tariff worries, doesn't seem to have a lasting impact on their stock. TSMC has so many different customers, they're somewhat insulated from specific trade issues. And NVIDIA, they've actually raised prices significantly. That's pricing power.
So even if the whole market dips, their underlying strength is hard to deny.
That's the takeaway, though. He does add a quick behavioral economics point. Sometimes investors panic and sell winners just because other parts of their portfolio are down, which isn't always rational.
Right. Selling the flowers to water the weeds.
Yeah.
Classic mistake. Okay, last main area. What about the other big tech players? How are they valued in this AI race? Oracle, Microsoft, Google, Meta.
He notes that for these companies, AI is important, yes, but it's not their entire business yet, unlike, say, NVIDIA's focus. They're influenced by lots of other factors. Plus, they're spending huge amounts on AI infrastructure right now, massive capital expenditure, CapEx.
And that spending can weigh on the stock price in the short term.
Exactly. It can make the stock look less attractive temporarily. But Tenenbaum suggests if these big AI bets pay off down the road, well, maybe their current valuations could look cheap in hindsight. He uses Google as an example, though, not specific investment advice. The big question for investors is, will these huge AI investments actually deliver the returns?
A multi-billion-dollar question for each of them. Okay, well, we've covered a lot of ground. Let's try and crystallize the main takeaways from Tenenbaum's analysis.
Sure. I think first is that surface stability hiding real volatility underneath, driven by geopolitics and AI tech. Second, the intense battle for AI chip dominance, where the U.S. currently holds key cards with ASML, TSMC, NVIDIA.
Right. And the ambitions of places like Saudi Arabia and the UAE face serious hurdles, mainly around talent, not just hardware.
And also, maintain a healthy skepticism about claims coming out of China, especially regarding Huawei's chip capabilities. The technical and software barriers seem immense.
Plus, this potentially game-changing shift towards AI that learns differently, through logic and self-play, not just massive data.
Yeah, that's a big one. And all of this continues to point towards the enduring strength and, frankly, monopoly power of key players like NVIDIA and TSMC, underlined by things like Musk's massive server farm build-out and those long order lead times.
It really drives home the need to look past the daily noise, doesn't it? Understand the deeper currents shaping AI and investments.
Absolutely. It's about the fundamentals, the underlying dynamics, not just reacting to headlines or unverified claims.
Okay, so here's a final thought to leave you with, building on all this. If AI is starting to learn independently, to figure things out through its own invented scenarios, how does that change everything? Not just technology, but our whole idea of what intelligence is. And what does the future of humans working with these machines look like? What new games will AI come up with, and what will we learn about intelligence itself from watching them play? Definitely something to mull over. Thanks for joining us for this deep dive.